So the next thing I want to talk about is earning reports. Now, we talked about jobs report and things that you got to pay attention to, but earning reports is another important thing. Now, if you're day trading a stock, you definitely need to keep an eye on the earning report of that stock. Now, I don't recommend day trading stocks, but again, if that's what you want to do, you definitely want to keep an eye on the earning days of that stock. Now, if you're not day trading stocks, if you're day trading ETFs like me, what you want to do is you want to definitely keep an eye on the earning reports of the stocks that move that ETF. That's very, very important. Okay. So in this case, for example, again, we do SQQQ, TQQQ. That's my ETF that I day trade. And if you pay attention, we have Apple. As I said, Apple is a huge portion of the SQQQ and TQQQ. So very important, and you want to keep an eye on the earning report of Apple. Now, there are a lot of different ways to actually find out earning report. You can just Google, stock name, earning reports, date, whatever. So you can just Google it. These are public information. You don't have to pay anyone to access that information, really. So, for example, in this case, Apple, I'm looking at it with Seeking Alpha, okay? And Apple is coming up. It has an earning report around, so what is it? February 2nd. So that's basically in a month, right? So that's basically a month. And I know there's going to be an earning report on Apple. So that's the estimate, that's the, all that stuff, and, revenue estimate and things like that. So what I need to see is essentially, make sure that if I'm day trading at that day, check the post-market Apple. One of the things is that with day trades, especially if you're day trading the earning days, especially post-market day trades, this means that earning is going to be released after the market closes, is that there's a lot of build up to it. So whether it's a positive build up or a negative build up, so that actually can affect the market too, and that could make a stock move the way that it usually doesn't move. All right. So just keep that in mind. It can be a little bit spicy, and it can be a little bit complicated. So you got to make sure, look at the analyst reports and see, if there's any expectations, or what are the expectations, are they realistic or not. But generally, you just want to kind of keep an eye on the earning reports and all that stuff. So I just want to point that out. That's another number that you want to pay attention to. If you want to really get advanced here, what I recommend is looking at Simply Wall Street. Okay. This is what I do. Again, these are usually paid services, by the way, but if you want to really get into details of it, Simply Wall Street is a paid service. Seeking Alpha also for some premium purchases, for some premium features, it is a paid version, paid software. But for example, what I want to do is I want to go to, this is Simply Wall Street. I want to go to analyst price targets. There you go. So I see, we got the 2023 here, and we got 129 average 1 year price. So as you see, the analysts are thinking that this has to, go up 31%. So average 1 year price target is $170. So again, now keep in mind, this is actually a double-edged sword. So if analysts think that the price is going to go 170, and if you get a bad earning report, let's say on February 2nd, that's not going to be good, right? That's gonna really drop the stock, because it's going to be worse than expected. So just keep that in mind. There's a lot of things that affect these things, so make sure you know your stock and know what you're trading. All right, guys, I just want to point that out. This is another one of those events that you want to pay attention. Thank you so much, guys. I'll see you in the next one.